The last time my guest was on, he was telling me how he was getting completely out of equities and moving into gold, uranium, copper, and now he's added a fourth asset, which he will unveil to us here today. Please welcome back to StansberryInvestor.com, Peter Grandich, a founder of Peter Grandich and Company and a longtime friend of the show and of mine. Peter, good to see you. Welcome back.
Well, good to be back and in honor of you, knowing what a great Jet fan you are, even though I'm completely out of the sports business. I put on this jersey just for you today.
Well, hopefully we'll turn things around this year for the Jets, Peter. We're still keeping the faith. We keep the faith in gold. We keep the faith with the JETS.
Amen.
All right, let's get down to business now. Last time we spoke was a few months back. You were telling me you were completely out of equities. You've been a gold lover for a long time. That's no surprise to anyone. Uranium, copper. But now, should we say the word?
Cash, yeah. So when we had not spoken for almost 6 or 7 years. In 2018, you were kind enough to speak with me, and I shared with you that I made a very unusual move. I sold most of my general equities back then and put it in physical bullion and mining shares. And then in 2019, especially into early 2020, I became for the first time in 30 something years a uranium bug. And I went very aggressive there, thinking I've stated that I would be in the biggest bull market I ever participated in. And then in the latter part of last year, I got aggressive in copper. But now, as we speak, I am very, very concerned. I've used the word petrified, which I don't think I've ever used in 37 years to describe the general equity market and the social, political, and economic environment here in the US and abroad. And I think the time has come to start to make cash, because I think there's going to be a very strong downturn in a market that stays down for quite a while. That cash is going to become king again and be able to buy assets in a few years at a much lesser price than they're going for now.
Wow. I'm surprised to hear you say that, Pete, because I would think you'd be all in gold.
Well, when you get to be 65 on April 2nd, you don't take as much risk that you did when you were 20 or 30 years younger. I think that has something to do with it as well. But I will tell you that of the three other investment vehicles that I still like that you mentioned, gold is the cheapest and probably the most safest of the three. And that's why, I've been buying mining shares again and even looking at the junior market, which has gotten very depressed. But I do think because of some really geopolitical factors that haven't impacted the market in years, and yet people want to say we're a global economy worldwide, but they don't want to take into consideration. I think we have a very serious problem here in the US with the president. I've coined it, and I don't mean to be facetious or sarcastic. I just mean to be realistic. I describe it as the editors and people who developed the movies Weekend at Bernie's and The Sting would be envious of what they've done with Biden since he's been elected. And I think there's great concern, and his viability to continue as the president is very questionable. And I think that opens a Pandora's box that's really going to impact the general equity market in a bad way.
Well, let's drill that down, because I'd like to understand, and I'm sure our viewers want to know more of what exactly concerns you in terms of the policies that are rolling out.
Well, first of all, let's just look at the man's general health. He clearly has some very serious issues. Now, I'm not wishing him bad. I believe all human life is sacred. And even though I may totally disagree with his political thoughts and his agendas, I'm not wishing the man dead and all, but it's clear and obvious that he has some very serious issues. They're not letting him act as a president. We have a vice president who's making calls to political powers around the world, which is unheard of. Each time he has tried to speak, he's had great difficulties. We saw a few days back, we saw a terrible fall he had, and they want to call it the wind. And there's just a lot of issues that will open the door to. And then his inevitable replacement, who couldn't even garner 4% in her own party when she ran for president, will suddenly be there. And I think she'll have a very difficult time. And quite frankly, while the economy is not going to recover in the manner that the Don't Worry, Be Happy crowd on Wall Street has bet on, and that we have some very, very serious issues now with the issues of debt. So there's a whole host of things, including a big move in America to the left. And we're just going to have an enormous amount of issues that we're not going to be able to sustain by just keep pumping out trillions of dollars and not having some price to pay for it.
So, just looking at your portfolio, Peter, how do you split that up between, gold, cash, uranium, copper, your mining stocks? How do you make those calls?
Well, there's still some very good value in the gold market. I think what people have not understood is how much the reserves abilities of major producers have fallen. It's well down over 50% now. And even though there was a chance for juniors to get financed last year, there's been several years of almost neglect on the junior side. So in a few years' time, it's going to even become more difficult for majors to continue sustaining, putting out the amount of production they do each year. So I think there's a lot more M&A, and I think the gold price people have to recognize, even at what people say this terrible low price now of 1,700 or so dollars. In August you couldn't find a gold bear, and quite honestly, it's difficult to find a gold bull right now. Yet we're still up 50% from where we were in 2018, but it feels the same way. So as a contrarian, someone that likes to bet against the crowd versus on it, gold looks as good. Now, uranium's had a great move, but in order for it to move even further now, the spot price is going to have to go up. It's going to have to finally drive in the utilities to make long-term contracts. I think that's coming, but we're going to need that to see another leg up in the market. So I'm not a buyer at this moment of uranium stocks. The copper argument, which is really the electrification argument, is a very strong one. Uh, this is going to be a great need for quite a years to come, and it can withstand a bear market in the general market, although it's overbought short term. I took profits in copper because they made so many gains in such a short period of time. But what I find almost no one has, no matter what kind of thinker they are, hard asset, stocks, bonds, they don't have any real cash position. They don't have an opportunity that if we do have a downturn and valuations come down on land and stocks and things of that nature, they're not in a position right now to take advantage of that. And they won't be if this happens in a very fast mode, which is possible. So I just think for the foreseeable future, as I move forward, I want cash to be something of substance in my portfolio, which it hasn't been for several years.
Interesting. Really, really interesting thoughts. So, on that note about electrification and going greener, I need to get your thoughts on the role silver would play. And are you considering adding silver to your portfolio if it's not already there?
Well, silver is always second, and I know that's going to kick the silver bulls, but it's always second in my book. It doesn't make it
Yeah.
a bad thing, but I have to own gold first. There's this continuously talk of a silver squeeze and the things that happened recently and all. And quite frankly, I've been hearing about the silver squeeze for decades. And eventually maybe one day it happens. But I think just the general fundamentals of silver and gold really being, it's like the black sheep in the family. It's like the kid that gets chosen last that no one wants to put on their team, whatever player they're playing. And yet it has a history for 2,000 years of being worthy to own. And now it's tossed out as a relic. And, a new thing, Bitcoin has replaced it. You don't need gold and silver anymore. So for those reasons, I want to own it, but I want to own gold first and then silver second.
Well, you said it. You said Bitcoin. So let's round up your thoughts here with the cryptocurrencies. I know offline we were talking, and you believe in the cryptos, right?
Yes.
You're not against
Not at
cryptocurrencies.
all.
But you're not falling for the Bitcoin mania, as you put it.
I wish I could stop now because the hate email won't happen until I now speak. Okay. But I am witnessing a mania across the board. And let me first explain that part, and then I will definitely answer your Bitcoin question. When we had the decline in 2000, it was mainly driven by the dot-com bust. Other areas and sectors and industries did rather well, and we saw that rebound fairly soon. In 2008, it was a real estate mortgage-driven financial crisis. But now we're in the everything bubble. Just about everything is way up, and there's a hubris, an arrogance, a cult-like mob attitude, and nowhere is that more prominent in Bitcoin. Now, first, let me say the people that have profited from it and have made 10,000% and all, congratulations. They deserve every credit and deserving of that and all. But in what I've learned is not only you're only as good as your last call, but only what matters is what going forward. And the biggest complaint people have ever had in 37 years, both as a professional money manager, a corporate consultant, and now as a private investor is, hey, you people always tell us when to buy, you never tell us when to sell. And I have always had a simple answer. And I say, forget where it's been and what you thought. Could you take everything you have in it right now and first buy today? And if you say yes, then it's okay. But what I find is I find people with 1,000% gain, 5,000% gain. Not only have they not taken anything off, but they're looking to pile more and more in. Danielle, if it was gold, it was my favorite gold stock, and I bought it at 2 and it's 53, and I not only sold any, but I'm buying more, I'm asking for trouble. History just shows me that. So for price reason, I'm cautious on Bitcoin now. But the real unknown, the thing that the Bitcoin bulls really, if they can get over this hump that I'm about to mention, then it's going to be all the things that they're predicting. The regulatory, the powers that be, all are pointing to coming out against or not supporting Bitcoin in a big way. And it's great that financial institutions are predicting these things of 200,000, a million. And by the way, in the 80s and 90s, they should throw people out of the penny stock brokerage business for predicting those type of gains. But they're allowed now, and people are talking about it. But everywhere you look, the European Central Bank president, the Bank of International Settlements, India, China, and even Jay Powell the other day, they weren't exactly painting a favorable picture for Bitcoin. Now, I personally think that they've been caught up in the pandemic issues and haven't focused on it as much. But if you're going to believe in the Great Reset, which many of the Bitcoin supporters also believe in, then how do you see the government wanting to support something that in a way takes it away from how they profit? So I just think it's a good time to be cautious, take something off the table if you own it. And it seems to me that it's waning in momentum. Now, people say it's just a consolidation and all, but it's going to be a lot harder to go 50 to 100,000 than it was from 1,000 to 50,000. And now that people can type all the hate mails and comments in this video when you show it, and don't like this old man, and I've been called worse whenever I speak about this, but I really hope people just account that it has nothing to do with the dynamics of it. It's just after all these years, I've seen so many people have such great paper gains and evaporate because they never take a profit.
Peter, it's your opinion and people have to respect it. And I think you just presented a very compelling case. And you're right, Powell, came out last week saying, look, it's a speculative asset. It doesn't mean it's going to stop the Bitcoin train. But you're right, there's a lot of focus now redirected on Bitcoin. And perhaps, like you say, with news of the pandemic waning here, they have to find a new focus. So we'll see how that plays out. Complete side note, you have a lot of fans out there. You had a bit of a health scare. You're okay.
Yeah, we thought I was having a heart attack last Saturday.
But Peter Grandich is okay.
Peter Grandich is okay. It turns out it was all muscular and it mimics a heart attack. But so far, he's so good. And he can still put on his Jet jersey.
There you go. There you go. Go Jets. Go Peter Grandich. Thank you so much. Final wish for you. I know how important Holy Week is for you and Easter. So if I just don't speak to you, happy Easter, Peter.
Well, praise be to God. And please allow me to say in this video, which I said on Twitter, of all the financial journalists I've ever been interviewed by, no one does it with more class and professionalism than you, Daniela. And I'm so happy where you are now at Stansberry, and what a gift it is for your viewers to have you leading this.
You make me blush on camera. Peter Grandich, thank you
You're
for those
welcome.
words, and thank you for joining me and for your time. And thank you all for tuning in and watching here on StansberryInvestor.com. We'll have much more for you. In the meantime, remember to share us where you watch us. That's it for me today. I'm Daniela Cambone.